What's going on, everybody? Welcome back to the channel today. Just wanted to drop in and give you guys an update on where we are. We're over halfway through the month of February, and just wanted to kind of give you guys an update on where we are. Well, we're trucking right along. Illinois Avenue is completed. We got that one done last week, and so we got a new property management company. I was on the fence. That was a big one. We have our 18 unit of building with one property management company, and then we got this one unit. I was on the fence, so we're gonna sell, we're gonna rent. We decided to rent, and I'll tell you a little bit more about that a little later in the video. But we wanted to kind of talk about why we didn't want to go with that route, with the keeping the same property management all under one roof. Number one, the biggest reason for us going with another property management group is just to fill them out. Whereas you don't have all your eggs in one basket. We had one unit that took a little longer than we wanted to get rented out. So I wanted to fill them out. And the apartment building was really close to this property management company, so I thought there was some good synergy there with them knowing the area. And so, but hey, I want to have two property managers, see who's the best, and if maybe we need to transition one to the other, but I want to start that relationship. And the funny thing about it was, hey, I'm telling deals now. I got two different brokerage that's seeing deals that, hey, know that I'm a buyer in the market. So I think it'll be good. Both of them, I interviewed both of them originally with the apartment, and they both were well. The presentations were really well. So that's going. We got two houses under contract, as you guys already know who have been following the channel. So we should be closing those next week. And what we're going to do with the units, we're going to actually do a portfolio loan. I haven't got the exact tentative numbers back yet to know kind of where we'll be at from a cash flow perspective. But right now, because we got the magic number, 70% loan to value is where you want to be at after you make your repairs. So if you got a $100,000 house, all in, you want to be at $70,000 after you make your renovation. So if you buy for $50,000, you put $20,000 in it, you got $70,000 totally invested, and you got 30% left over, or $30,000 in equity left. So with us, with these three assets, the total after repair value should be $530,000. So $530,000 for these three houses. One's the value should come in around $160,000, the other $140,000, and the other one $230,000. So of those three houses, we're all in it. So the after repair value be $530,000. So we go to refinance those, we rent them out, and now we can go and do the BRRRR strategy. So buy, renovate, rent it out, refinance, repeat it, BRRRR. And we'll be able to go in and do the refinance on this one. And so at 70%, we'll be at $371,000. So all in, after we do the renovations, everything, we'll have three up. If we may come in a little lower, we'll see how the renovations go with the other two. But we may come in a little lower, but worst case, we'll be at $371,000 total all in. But that's 70%. We can go get a loan for 80%. So that 10% is profit. And that's tax-free profit because it's a loan. You're getting a loan, and you don't have to pay taxes on money you get from a loan. So, and to the tune of that 80% loan will be right around $424,000 if the after repair values come in at that amount. And so that leaves a spread of $53,000. So we do the work, we renovate, we rent them out. Now we go to the bank, get a new loan, and boom, now we get a check cut for $53,000. Now, of course, the closing cost for the loan is going to come out of there as well too. And so that's part of it. But do three deals, rent them out. The cash flow should be somewhere around $1,000 cash flow after we pay the mortgage, taxes, insurance, and put a little money back for capital expenditures for repairs. That we should have about $1,000 a month cash flow from these three houses, and we're getting a $50,000 check. And the debt that we carry, this is a commercial loan, so the loan's not going to be in our personal name; it's going to be in the company name. And so that's the strategy that we're using for the portfolio of these loans. Whereas that I was talking to a realtor yesterday. We only have 2.5 months of supply in the Panama City market, and it's like, okay, if inflation goes up, if we start seeing, what they're talking about, with inflation going up, the cost of money is going to be cheaper. Now, the word money is going to be worth less. So, okay, normally when that happens, the price of assets go up when inflation, because the money's worth less, so it takes more money to buy the same thing. And so in that scenario, so the house is gonna get more expensive. They're gonna appreciate. Now I got cheap debt, a cheap interest rate on my debt. My tenants are paying down my mortgage on this cheap interest rate, so I'm going down. I'm paying down the principal a whole lot faster now because I got low interest rates. And then two, we're paying all this money off with cheaper money. The money's worth less, but we're still paying this debt off that we got today when the money's worth more. We're paying that off with the monthly rents. And we still got 20% equity from day one in the properties. And with inflation, they're going to push the values up. And so you're doing all this. And, oh, by the way, we have zero cash. We got infinite return because we're getting paid $50,000. We're not even leaving money in the deal. We're getting paid money. And so that's kind of the strategy that we're going on. From the goal beginning, we're doing 15 deals this year. So that's 3. So we can do this by 5, then, yeah, it's gonna be pretty good. Because we're getting a $50,000 check, you're still gonna end up with a little bit over $100,000 in equity left in the deal. And that's kind of where we're going, what we're trying to do, and what we're teaching people to do. But that's one of the things. At the same time, I'm doing this with YouTube. I'm in the process of creating my course. We'll see the roadmap to success real estate course, but I'm putting that together now. That'll be coming out sometime in March. We're gonna launch the beta version of that going through. And we're just getting to our goal of creating 1,000. We're helping 1,000 people. You see it at the beginning of every video. That's our mission. We want to help 1,000 people become financially free through real estate. And that's, this course creation and then building this mastermind group around it to help facilitate people on their journey to be real estate investors is what it's all about. And looking forward to that. And then on top of that, I signed up recently for a authorship seminar at Georgetown University. So I'm in the process of writing a book that started earlier. Actually got class in 30 minutes, but yeah, that's been good, especially for me. I tell you guys, you got to be comfortable being uncomfortable. Well, I'm uncomfortable writing. I'm an engineer. I'm an analytical. I love math. Writing is not my forte. Would never thought that I would be a author, but that's limited mindset. You got to change your beliefs, how you see yourself, and it's always been this way. Doesn't necessarily has to be that way in the future. And so you got to get rid of those limiting beliefs, just like everybody else do. And I'm no different. And so I got to practice what I preach and be uncomfortable. But that's something that hopefully we'll go through, and we'll have a great best-selling New York Times bestseller at the end of the year, Lord willing, with the book. So that's something we're doing as well too, along with the course. And and so that's the journey. So just wanted to give you guys an update, kind of where we are on the strategy. We're putting a couple of offers out there on other deals, so hopefully those come up. We get 1 or 2 of those under contract, and we're gonna be well on our way to getting to the 15 deals that we set up. That the vision board. Hopefully you guys go back to the video, and I'll drop it in there, the link up top. Go back, check out the vision board video. We kicked off 2021, 15 deals. That's what we're doing. But building relationships, whether it's the different scenarios, foreclosure, probate, people looking to sell. That we're doing the 15 deals and the 2 multifamily as well too. So, and you see everything else. But the paramount, this is my why. I was talking to one of them kicking off the course. The why. You got to know your why as a real estate investor. For me, the biggest picture on here is the family. That's my why, and the reason that we do everything that we do. And as long as hey, everything that you're aligning for, that you're going for, everything that you're doing aligns with your goals and your why. And that's where I'm at right now with everything. And so we got to hustle, we got to grind, and we got to execute. We got to put in the work. And if we do that, then if we become faithful to the process, good things are going to happen. So just wanted to drop in, give you guys an update. We just, recently did another walkthrough of another video. And then hopefully I'll be getting down to Panama City in the next couple of weeks or so. We'll see with all these projects, laying eyes on and kind of working with the team, making sure we're doing things the right way. And I'm excited. So definitely drop down comments. I want to know how you guys are doing on your goals. Drop them down in the comments. Make sure you hit the thumbs up and the subscribe button and share this content with any other real estate investors. And I will see you guys on the next video.